Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
Hi, this is Carrie Young with Mortgage Mom Radio. Did you know there are multiple home loan options available with little to no money down? Whether it's conventional, VA, FHA, USDA, or down payment assistance, let us find a loan that's right for you to get you into a home with minimal out-of-pocket expense. Give us a call. That number is 844-935-3634. That's 844-WE-LEND-FOR-YOU. That's WELEND and the number 4. Or visit our website. That's mortgagemomradio.com.
All right, so welcome to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom, and every week I bring you guys new information about all things real estate and mortgage. Mostly mortgage is what we talk about since that is what I do, but many times we do talk about real estate, and I've got a fantastic real estate agent right on my team. So any questions that you guys might have, please feel free to put those into the feed and we'll get those questions answered for you. So I do want to remind everybody that this is an interactive show. I do want everybody to feel comfortable jumping on, joining, asking questions. Tell me that you're here. Make sure that you say hi. I can see that Nora jumps in. She says, hi, Debbie. Heather says, hi, all. And anybody else that wants to jump in, join and let me know that you're here. That is fantastic. But this is an interactive show. I do want you to be able to ask your questions. Today is going to be one that's going to be very interactive. So I want you guys to all get ready. Today we're talking about alternative financing options. So many shows we talk about VA, FHA, conventional, Fannie Mae, Freddie Mac, jumbo loans, those conventional loan options where you have to qualify to buy the property. And so today we're going to talk about alternative options that we do have available for you. Many times our clients don't know that those options are there, and so they feel like they are not able to buy or maybe not possible to do a refinance. And so I do think that every now and then that it is very important that we remind you all of the different options that we do have available. So if this is a show for you and you're wondering if it's something that we might be able to help you with, please go ahead and ask those questions. I am more than happy to answer them for you. I've got Heather watching the show, so anything that while I'm here in the studio, I don't know the answer to, she can quickly look it up and she can type it into the feed for us. Let's see. So Sandra Nelson gets on. She says, hi. So hi, Sandra. And Lori gets on, says, hi, Debbie and Heather. So hi, Lori. Thank you so much for joining. And Heather says, hi, Sandra and Lori. So I do want to remind everybody that is listening to me by radio this coming weekend that if you want to be part of the show, you want to be able to ask your questions during the show, and you want to be able to watch me do it live, you've got to know when I go live, which is on Wednesdays, usually right about 1 o'clock. Today I started at 1:15, but you will get a text message from me if you opt yourself in. So text the word MOM to 844-935-3634. That's 844-WE-LEND-FOR-YOU. WELEND and the number 4. Now that is the same phone number to call my office. So if you do want to get one of me or the girls on the phone, you want to ask your questions and you want to find out if we've got an option available for you, that is the exact same phone number. So please feel free to call. You can go to my website. You can book yourself an appointment for a call. So if there's a certain day and time that you know is going to be convenient for you, just go ahead and get on there and book it. If you don't see a time that is convenient for you, I want to remind everybody everybody that we are here to help. We are definitely givers, me and my team. So if you need an earlier morning appointment or you need a later in the evening appointment, we've got Carrie that's in Tennessee. So she's a couple of hours ahead of us in California. So easy for her to jump on a call for you at 6 a.m. in California. It's 8 a.m. for her. Or if you need a call later in the evening, that is something that Heather's been really great at doing as well. So please take advantage of that. You won't see those times that are listed for you to book, but you can send me an email directly, and you can contact me right through the website, or you can send me an email direct. It's Debbie@mortgagemomradio.com, or it's mortgagemomradio.com is the website, and you can hit the contact us button. Just let me know what day and time works for you, and I will make sure that we get you all booked and ready to go. So Carrie says, hi, I'm here too. So Carrie, thank you so much for joining. And I want you girls to stay on throughout the show because we are talking about alternative loan options. So we're going to be talking about those DSCRs. Many of you don't know what that means. We're going to talk about that. We're going to talk about our community mortgage program, where that is going to be a stated income program for a primary residence. We're going to talk about bank statement programs for those self-employed borrowers. And I'm sorry that my camera is moving around a little bit. The puppy is here with us today and he is not being a good boy. So ignore a little bounce here and there. Anyway, so let's get started. The first loan program that I do want to talk about that I think is a fabulous program is called our Community Mortgage Program. This is a stated income program for a primary residence. So who does this help and why would you want to do this? And we'll talk about down payments, credit scores, all of that good stuff. Aurelio jumps on, says, hi, Debbie. And my Aunt Pammy jumps on and says, hi, Buggy. So my whole family does call me Bug. You guys have now just learned something special and personal about the Mortgage Mom. So thanks so much for joining, you guys. Appreciate it. Please ask your questions if you have any. So community mortgage is going to be a primary residence loan. It is stated income. So we are not going to verify where you work. We are not going to ask you for W-2s. We are not going to get pay stubs. We are not going to get tax returns. This is a really great program for somebody that is maybe thinking about moving out of state, relocating, and they want to get where they're going, but they haven't found the job yet. And we don't have the opportunity to verify where they'll live. They don't want to go and they don't want to rent first. They really just want to get there. They want to get settled in, and then they'll get the job. And then we can always look at doing a refinance to give you better interest rate and monthly payment. So remember, when we talk about an alternative type of loan, these are not qualified mortgages. These are called non-qualified mortgages. So because of that, they do carry a higher risk, which means that they are going to carry a higher interest rate. So think about hard money loans. Those are going to be super high in the 10, 11, even 12% range. These are going to be better than that, but you're going to probably be somewhere in that 8% range, depending on how much money that you put down, what your credit score is, and the type of property that you're purchasing. So whether it's a single family, a condo, or 2 to 4 unit, the interest rate is going to fluctuate a bit, but it's going to be in the 8% interest rate. So you might think, oh my goodness, that's so high. But we can always do a refinance once you do get yourself in a position that you are showing the income needed to qualify. Now, remember, we don't necessarily need to have a 2-year history of your job. So if you're working in California and you decide you want to move to Tennessee and you just, you're with the union, you've got your card, you're a pipe fitter, you're an iron worker, whatever that your journey might be, and you just want to get there, you want to get settled, then you're going to go down to the local union, you're going to get yourself signed up for a job, you're going to get on the job. At that point then, because you've been in the same job and in the same industry for the 2 years, we have a 2-year employment history that we can look at. So just keep in mind, this is a great program if you cannot show income. Now, this is also a great program if you're self-employed and you're writing off all of your income and you really want to be a homeowner, this is a great program for that as well. We don't have to prove income in any way. Now we're going to talk about bank statement programs here in just a minute, but I want to finish this program. Again, this is for a primary residence only and second homes. So if you wanted to buy yourself a second home, a vacation property, this program would work for that as well. It is not going to work for an investment property, but we do have other options that are alternative financing for investment properties that we'll talk about as well. So community mortgage is great. I'm going to let Carrie or Heather, whoever can type into the feed the fastest, confirm for me the credit score and the down payment amount. But I do believe we are at 20% down on that. So this is not for our low down payment borrower. This is for somebody that can come up with some down payment. So I do believe 20% down is going to be our minimum. So let one of the girls actually confirm that for me. And I also believe that your minimum credit score needs to be 660. So they're going to look up the guidelines really quick, and I'm going to confirm that information for you. So once again, I just want to make sure you guys heard me. This is not a low down payment. This is not a 3%, 5% type of loan. So if that is what you need, then we're going back to Fannie and Freddie and FHA, those conventional and Govy programs where you do have to do complete full qualifications. So if you do have a decent down payment, you've got a decent credit score, then this could be a program that could work for you. And if you've thought you couldn't get financing, well, maybe you can. So make sure that you do call our office and, go to the website, get that appointment and talk to one of us. Talk to us about your situation. Maybe this program is not as good as doing a bank statement program. Maybe this program is better for you than a bank statement program. So this program is really good. A bank statement program is when you are self-employed only. So the community mortgage that I'm talking about does not require that you are self-employed. You are not going to say what you do on the application at all. So we are not going to verify anything. You could be W-2'd, you could have a job, you could be working. That doesn't matter. We are not limiting this to only self-employed borrowers. So Carrie did jump on and said community credit, the credit score for community mortgage is 680. So I do take that back and it is 20% down. So I was right on one, wrong on the other. So a 680 credit score and 20% down. So talking about a bank statement program, community mortgage might be better for you. If you are self-employed and you cannot qualify using your tax returns, the next program that we're going to jump into is going to be a bank statement program. We are going to look at your last 12 to 24 months of business bank statements to see how much you've actually done in deposits from your business. So returns, if you purchase inventory or you purchase tools or supplies for a job and you go to return those items, that income coming in is going to be excluded. But actual income coming in from earnings, we're going to calculate based on those bank statements. This sometimes works, and sometimes our self-employed borrowers, even in their bank statements, aren't showing enough because maybe, like many of you, you get cash and you want to keep your cash in your hand and you don't deposit the cash into the bank account. So if you're a cash business and maybe you're not making those deposits for us to verify, then community mortgage for your primary or your second home could be a very, very good option for you. Heather did say plus reserves, so she is reminding me to let you guys know that you not only need your 20% down, but you will need reserves. Reserves would be the full amount of your mortgage payment, so whatever that number is, that principal, interest, taxes, and insurance, and we're going to multiply that by 6. That is going to be your reserves. So Heather, I do want you to verify our reserve requirement on community mortgage, whether it is 6 months or 12 months. So type that into the feed for me as well, because every single program and every single lender has a little bit different reserve requirement. So I'm going to have her confirm that for us here in a second. But I do believe it is either 6 or 12 months. Community mortgage, I'm not 100% on. So I'll let her confirm that and let you know. But you do need to have your down payment, your closing costs, and then enough money in the bank for us to verify that you would have some reserves after closing. You are not required to keep those reserves after we close. Those reserves need to be in a bank account at the time of closing, but if we close in the next day, you need to move those funds around or utilize those funds for another reason, and you need to use them. That is absolutely allowed. But at the time of closing, you will need to have those reserves available. So as soon as she confirms that one for me, we'll come back to it and I'll confirm for you the amount of months that you would need of reserves for the community mortgage. So I do want to jump into bank statements. Again, we're going to talk about DSCR. That would be a debt service ratio for investors. So we're going to talk about those two programs today as well. And if we have enough time, we're going to jump into hard money too, because hard money is also something that is out there and being utilized. And we're going to talk about why you might utilize it. When does it work best? So Heather says, Carrie corrected me. Community mortgage is 640. So I was right. Woohoo! All right. So we've got 640 on the reserve, 640 on the credit score. And then reserves are 12 months. So you do need 12 months reserves. And I was right. 640 is the credit score. So as long as you've got a 640 credit score, 20% down payment, you're buying your primary or your second home, your vacation property, and you've got the 12 months of reserves. So let's just say that your total mortgage payment was $3,000. You would need $3,000 times 12, and that would be the total amount that we would have to verify in reserves for that community mortgage. So it really is a fantastic program. It's a fantastic product, and it can help for so many different reasons. So with that, we are going to take a super quick break. If you have any questions about community mortgage, put them into the feed right now. I will read them out loud. I will answer them for you when we get back from break. Just going to run a commercial or two to give myself a chance to recoup. And then we're going to start in on the bank statement programs that are for self-employed borrowers. Then the third segment, we're going to jump into those investor loans where you also do not have to qualify for the mortgage. The property qualifies for the mortgage. So we're going to explain that a little bit too. So don't go anywhere. Give me 2 minutes. Be right back.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona, 0941504, Florida, LO 76508, Georgia 69178, Idaho, MLO 208023, 7926, Illinois 031005, 8339, Missouri, North Carolina, I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington, MLO 237926.
She's the mortgage mom.
Mortgage Mom here. Hey, if you're a homeowner, you've probably got some equity in your home. Do you have debt that you need to get rid of? Well, give us a call. Let us take you through that blended rate calculator that I always talk about. Let's determine if it makes sense for you or if you should keep what you have. How do you do that? Well, book your phone consultation. Go to our website at mortgagemomradio.com and you can book your call right there. Once again, that's mortgagemomradio.com.
Hi, this is Carrie Young with Mortgage Mom Radio. Did you know there are multiple home loan options available with little to no money down? Whether it's conventional, VA, FHA, USDA, or down payment assistance, let us find a loan that's right for you to get you into a home with minimal out-of-pocket expense. Give us a call. That number is 844-935-3634. That's 844-WE-LEND-FOR-YOU. That's WELEND and the number 4. Or visit our website. That's mortgagemomradio.com.
All right, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and today we are talking about alternative loan programs. So what can we do to help you to get into a property if you cannot qualify to get into that property? We just talked about community mortgage. That's a fantastic program. You do not have to be self-employed, and it is for your primary residence or your second vacation home. You need 20% down payment, credit score of 640, which we just confirmed, and 12 months of reserves. If you've got those pieces put together, you can definitely get into a home. So the next program that I want to talk about is a bank statement program, and bank statement loans are for self-employed borrowers. So if you are a W-2 employee and you're getting paid on salary or you're getting paid hourly and you get a pay stub and, those W-2s, this would not be a loan program that you would qualify for. You need to be self-employed to do a bank statement program. And as I mentioned right before break, the bank statement program, we're going to take 12 to 24 months, and we've got two different programs. So the 12-month program of your bank statements to confirm deposits into your business is going to carry a slightly higher interest rate than if you can qualify by showing us 24 months of bank statements. So the longer the history that you can give us of those bank statements that we can confirm that the income has been secure and stable, then a little bit better interest rate that you will get. But maybe one year you had a bad year and the next year you had a great year. And so maybe that bank statement program is best for you on that 12-month level. The bank statement program will have slightly better interest rates than the community mortgage does because it is not stated. We are verifying that you own your business. We're seeing the bank statements that you're providing. We're verifying the income that has come into those bank statements, and we are qualifying you based on those deposits, not stated income. Whatever you say, it is what it is, right? That is not what we're doing. So this one will have a little bit better interest rate than the community mortgage will. I'm going to let Heather or Carrie, whoever can get to it first, confirm what the down payment requirement is on a bank statement program. I am about 99.9% sure that it can be as low as 10% down on a bank statement program. However, and I want you guys to hear that, however, when you are putting a low amount down on those bank statement programs, the interest rate starts to get pretty high. So I would recommend that if you are considering the bank statement program, that you do have at least the 20% down payment. So I'm just going to let one of the girls confirm for me that the 10% down that we did have on the bank statement program has not gone away yet. I don't believe that it has, but our guidelines change all of the time, and they've been changing very rapidly with the industry changing. So I do want somebody to confirm for me that the 10% down is still available. It was as of the last time that I checked, which was about 6 weeks ago. So I'm going to have one of them confirm that for me. But again, even 6 weeks ago, when I was looking at that program with the 10% down, that interest rate was quite high. So really, I would highly suggest that 20% down is going to be a much better place as far as the interest rate goes. But it is a really great program for that self-employed borrower that does maybe write off a lot on their tax returns, or they are doing cash deposits, a lot of cash in their business. And so they don't necessarily qualify showing us those 1040s, but they would qualify showing us those bank statements with the deposits that are going in. So that is a really good. Credit score minimum on the bank statement program is going to be around 660. So as long as you are a 660 or better, then you will be able to get into the program. Again, the higher that the interest or the higher that your credit score is, the better that interest rate is going to be. So I would really recommend trying to, if you're ready to buy, try to get your credit score, to 680 or better. Try to be able to come up with that 20% down payment. And in this program, with 20% down, with a 680, 700 credit score, we could absolutely get you down into the 7% ranges. So, 7.5, 7.75. So again, the interest rate is going to be higher, but it is going to get you into a home, and it is going to get you the financing that you need. Maybe you just started your business and you filed tax returns for the first time in 2022. And so you really need to get 2023 filed so that you've got a 2-year history of the self-employment. Then in 2024, which is 7-8 months away, we do a refinance to get you into better interest rate and better terms. So these are great programs to get you into homeownership, purchase a home for somebody who maybe didn't think that they could qualify. Guess what? You might be able to qualify. So definitely something to give us a call and talk to us about. Now, the other thing that keep in mind is that these programs can be utilized for refinances as well. So if you purchased your home and you're trying to get some equity out of it, but you're in that situation that you are self-employed and you're trying to do a cash out refinance, but you don't show enough income to qualify. If you don't show enough income in the bank statements, we're going to move you over to the community mortgage if it's your primary residence or your second home. If you do qualify showing those bank statements, then we would do a bank statement product, but you can use this for refinance as well. So if you are looking at wanting to possibly do home improvements, if you're wanting to pay off debt, this would be a program that you could utilize if you wouldn't qualify for other types of financing. My dad jumps on. He says, hi there. So Dad, thanks so much for joining. Sure appreciate it. So that is basically the bank statement program. On the bank statement program, you do have to have reserves, so we will confirm that as well. I'm going to actually have the girls confirm the 10% down payment. I'm going to have them confirm the 660 credit score, and I'm going to have them confirm the reserves. I do believe that the reserves on the bank statement is actually 6 months, and then the credit score is 660. It could be 640, so it does get lower than the community mortgage does, or actually we decided community mortgage was 640 as well. So the bank statement might go as low as 640. So I'm going to have the girls confirm that, and I will make sure that I tell you guys exactly what you need. But as I'm talking about these numbers, 640, 660, 680, these are not difficult credit scores to get to, which means that more people are going to have the possibility and the opportunity to get financing who didn't think that they could before. And with community mortgage, if they'll really go down to the 640, and if bank statement will go down to the 640, we've got a lot of people that could absolutely utilize this that didn't think that they could get financing before. When you think stated income or you think alternative or non-qualified mortgage, you're usually thinking, oh my goodness, I'm going to have, a credit score that's in the 700s or 720s or 740s. And that's not necessarily the case. We've got programs, we've got products. We want to help get everybody into homeownership. So with that, again, this is interactive, guys. If you have questions, please put them into the feed. Ask me. I'm happy to answer them for you. I am going to take a quick commercial break. And when we get back, we're going to talk about that debt service ratio loan program. And during that commercial break, I'm going to have either Heather or Carrie confirm that information for me. So stay tuned. Don't go anywhere. We'll be right back.
Debbie Marcoux is licensed by the Department of Financial Institutions and MLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom.
Mortgage Mom here. Have you been thinking about buying your first home and you just don't know where to get started? We'll book a phone consultation with either one of my loan officers or even me. How do you do that? We'll go to our website, go to mortgagemomradio.com. Right there, you'll see a book phone consultation and get on the books. Talk with us. Let's get you started from beginning to end. We'll walk you through that process. That's mortgagemomradio.com.
She can get things done when you're in need and don't know where to go. Pick up the phone and call Mom.
Debbie Marcoux is licensed by the Department of Financial Institutions and MLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom.
Mortgage Mom here. Hey, have you been thinking about doing some home improvements or renovations to your home? Well, property values are up and interest rates are down. Why not explore whether that's something that you can do? How do you do that? Well, get on the books. Get a phone consultation with us. What do? Go to mortgagemomradio.com and book your appointment right there. That's mortgagemomradio.com.
She can get things done when you're in need and don't know where to go. Pick up the phone and call Mom.
All right, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and today we're talking alternative loan programs. I am weighing heavily right now on Carrie and Heather to be getting me the information just to confirm things for you. And the reason for that is, number one, I'm sitting in the studio. I don't have my computer in front of me, and I'm not checking guidelines. Number two is that these programs, they change quite a bit. They're very variable. So depending on your credit score will determine the amount of the down payment that is required. So Heather just wrote into the feed to give you guys an example. A bank statement is 20% down if you have a credit score of 700 or higher, and 25% down if you have a credit score of 660 to 699. So depending on the amount of actually, depending on your credit score will determine the amount of down payment that is required. She said if it is an investment, 25% down is needed with a 740 credit score and 30% with a 680 to a 699. And she is going to confirm for me the reserve requirement. Now, one thing to keep in mind is that if we were doing an investment property and you are a bank statement candidate, we probably wouldn't put you into a bank statement program. We would actually probably put you into what's called a debt service ratio. Many times you'll hear people refer to it as a DSCR or an investment program. And that is because those programs, which we're going to talk about right now, rely heavily on the property itself rather than on your income. So those investment properties those loans are actually really great. Why would we use a bank statement loan for an investment property? Well, if you don't own an investment property, or if you don't own a primary residence already and you're now buying an investment property, you do a DSCR loan or a debt service ratio loan. You do have to have some sort of expenses where you live right now. They like to see that you have a mortgage that you've been responsible on and you've made your payments on before we do this DSCR product. So if you don't own any property and you're looking to buy an investment property and you're self-employed, then we would probably look at the bank statement for the investment property program. So Heather said reserves are 12 months, but it's depending on the situation. So again, it's going to depend on your credit score and the property and all of that good stuff, loan amounts and things of that nature. So it's always kind of a moving target, but the program is there. And so based on what your needs are, we're going to determine which program works best for you. So the debt service ratio or the investment product, this is a really cool one because like I mentioned before, it really does rely very heavily on the property itself. And what do I mean by that? So if the property that you're purchasing, and this is for investment only, so you are planning to buy this property to rent it out for rental income, we are going to have the appraiser tell us, or they're going to determine what the rents that the property, the subject property could bring in on a monthly basis. If that property that you're purchasing is already a current rental and it has rental income history and it has a current tenant in the property, we are going to actually use the rents from that tenant that will be remaining or staying. But if this is a property that is not an investment property right now, you're purchasing somebody's home that lives in it, they're selling, they're moving, you're buying it, and you want to make it an investment property, then the appraiser is going to determine for us what the rents will be on that property for a monthly basis. Your monthly payment for this property cannot exceed the amount that it would bring in rents. So the property needs to be able to carry itself. So if the payment is $3,000 and the mortgage with all of the expenses, taxes, and insurance included would also be $3,000, then the property will qualify for that financing. It's really a good product. It really is. The interest rates are going to be in the 8% range, like the community mortgage was, but it is an investment property. The property is qualifying itself. You're not verifying your income. You're not showing us your tax returns. So it is going to be a really great program in that regard if you want to become an investor and you don't want to have to worry about being able to qualify for the financing. The property is going to qualify on its own. You are going to need a minimum of a 25% down payment. all investment property loans will require 25% down and up. So depending on the purchase price and the loan balance, you could need 30% or you could need 35%. So it does depend on the sales price of the property, how much of a down payment is going to be required for this program. But you can get in with as little as 25% down. You do have to have a minimum of 12 months of reserves minimum. So again, as the loan balances, loan amounts get higher, then that reserve requirement might get higher as well. And you do have to have a minimum credit score of 700. So this one again is going to be probably the hardest of all of them as far as credit score and down payment is concerned, but also very easy to get the financing as long as you're doing a good job in picking out the property that you're purchasing. And what do I mean by that? So if you're trying to buy something that is the payment is going to be more than what the rents could be that are collected, you're going to go into the negative every month, then the property's probably not going to qualify for this program. We do have a little tiny bit of wiggle room, but as the payment becomes more than what the rents are, that interest rates, they give you a premium. There's an interest rate premium. It starts to go up and up and up and up. So really, we want to try to stay right there at the rent is covering 100% of the payment to get you into the best, possible financing and interest rates for that type of program. But there is a little wiggle room. So, but you need to do your due diligence. If you're buying something that will only rent for $2,000 a month, but your mortgage payment is going to be $5,000 a month, that is definitely not going to work. That's like a 2-to-1 ratio. It's just not going to work. That it's not going to qualify for that financing. So you do want to make sure that you're making a smart move in what you're purchasing is going to basically carry itself. But as long as you've got the higher credit score and the higher down payment and, the rents are going to be enough to cover that mortgage payment, it's a really great option for many, many people. Now, keep this in mind. Even if you're doing a full doc qualifying Fannie Mae conventional investment purchase, you still need to have 25% down on an investment property. Okay. Unless it's a single family 1-unit property, you could get in with 20% down, but everything else investment is going to be 25% down. So the fact that this program is allowing the 25% down is really, really great. It's not any different of a down payment than really what you're going to be required to have, even if you were showing us your tax returns or your W-2s or your pay stubs and you are fully income qualifying. It's really in the same realm as far as what is required. The interest rates on an investment property, even with the standard conforming Fannie Mae, Freddie Mac type of loans, those interest rates are going to be up there in the high 7s right now for an investment property. So, the fact that this program is going to be a lot less paperwork for you and somebody that might not be able to qualify without doing this program to have interest rates in the 8% range is truly not a bad number whatsoever. So that is another program that we have. Again, many people refer to it as a DSCR or a debt service ratio. There are tons of lenders that do these programs. So that's why, again, it is a bit of a moving target. So depending on the lender that we put you with will determine what is required. So if you have a little bit lower credit score, we're going to have to go to a different lender, but they may require a little bit different down payment. They may require a little bit different reserves. But it is a great program. It truly is. And many people don't even know that it exists or that they would be able to utilize it to get to buy themselves an investment property. So all of the 3 different programs that we talked about today, talked about your community mortgage. That is a fantastic one again. And it's not even, I keep saying stated income, but it's not even stated income in reality. We're stated income in the old school days, back in 03, 04, 05, everybody was doing stated income. We'd actually say where you worked and then we'd give you a figure, a number of what we said you made every month. And that was stated income. This one is actually, we're not writing down where you work. We're not putting it in the application. We're not even putting a number in the income field. So it is truly just a no income qualifying loan. So that is the community mortgage. The bank statement mortgage, like I mentioned, that is self-employed borrowers only, but we are going to verify your income based on your bank statements. So the deposits into your bank statements. And then 3, we just talked about the debt service loan, the debt service ratio loan, or the DSCR loan, investment property loan, whatever you want to call it. And that is going to be, the property is going to be qualifying to carry itself. So again, there's going to be no income verified from you on that loan application. Heather says, no income on community mortgage. They don't even look at it. So exactly, that's what I was just saying. We're not even going to specify where you work. We're not going to say how much money that you make. It's just, it's truly not even stated income. It is a no income qualifying loan. So those are 3 really fabulous loan programs that you guys can take advantage of that many of you don't know exist. If you have questions, you want to know if it is something that would work out well for you, something that would help you to become a homeowner, or maybe help you to be able to go and buy your first investment property, or maybe you need to do a refinance of your primary residence. You were W-2'd when you bought the house, you fully qualified, then you decided to start your own business. Your business isn't quite where you want it. It's not quite where you want it to be yet, but maybe on paper, it's not quite where it needs to be, but you really do need to get that refinance done. These are great opportunities and options available. So just pick up the phone and call us, call our office, talk to us, and let's see what we can do to help you to get that financing going. So how do you do that? What's the number? Well, it's 844-935-3634. That's 844. We lend for you. WELEND and the number 4. Or you can go on over to their website, go to mortgagemomradio.com, and you can click on the appointment button and you can schedule yourself an appointment for a phone call, and we will reach out to you at that day and time that works best for you. So the last loan program that we are going to talk about is going to be hard money. I've done some shows about hard money before, but we're going to talk a little bit about that, see how it is different. All of these 3 programs that I've talked about so far today, like I said, we're going to be in the very, very high 7s to high 8s. Is really where those interest rates are going to land for those loan programs. Hard money usually starts off in the 10% range, with the interest rates having gone up here over the last year and a half or so. We're seeing those hard money, some of them come in at 11, some of them 12. So definitely a much more expensive loan product, but a little bit different type of program, a little different product that truly might be something that would benefit you. So I am going to go into that. We are going to take a super quick break. And when we get back, I'm going to jump in to hard money. So if you have any questions whatsoever about anything that I've said so far, put those questions in the feed. Happy to read them out loud and answer them for you. So stay tuned. I'll be right back.
She's a mortgage mom.
Hi, this is Debbie Marcoux, the mortgage mom. Did you know that interest rates are down and home prices are up? Well, this is a great time to consolidate that first mortgage that you have with that home equity line of credit or second mortgage that you might have outstanding. If you want to know more, you want to know what that might look like, you want to know what those payments might be, what kind of interest rate can we get you, well, give us a call. You can reach us at 844-935-3634. Or hey, go to our website, mortgagemomradio.com.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona, 0941504, Florida, LO 76508, Georgia 69178, Idaho, MLO 208-023, 7926, Illinois 031-005-8339, Missouri, North Carolina, I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington, MLO 237926.
Hi, this is Carrie Young with Mortgage Mom Radio. Did you know there are multiple home loan options available with little to no money down? Whether it's conventional, VA, FHA, USDA, or down payment assistance, let us find a loan that's right for you to get you into a home with minimal out-of-pocket expense. Give us a call. That number is 844-935-3634. That's 844 We Lend for You. That's WELEND and the number 4. Or visit our website. That's mortgagemomradio.com.
All right, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and today we are talking about alternative loan options. So I do want to remind everybody that I am here in studio. I do not have my computer in front of me, so I'm giving you the most up-to-date information that I can off the top of my head, basically from my memory. The girls have been actually going in there and confirming everything that I've been telling you guys, and I have been correcting myself where I've been wrong. So just make sure that if you are listening, that you're hearing what I'm saying and you understand where we made those corrections. And if you're not sure, if you're thinking maybe there's something that might work for you, just call us. Like I mentioned, these are moving targets because it really does depend on how much money that you're putting down. Is going to determine what interest rate that you get. It's going to determine how much that you need in reserves. It's going to determine many, many things. So just call our office, talk to us, let us help you to determine which program is going to work best for you. We'll talk about your credit score. We'll talk about your income, and then we'll talk about what kind of interest rates that you'll be at, how much money that you're going to need down, and what you're going to need or to utilize in reserves. So just keep that in mind. So my dad is asking me, can you explain what Biden's new bill where people with lower credit scores may qualify easier than before and how it impacts people the very good to get great credit? I'm asking the questions. So that's actually a good question. I did actually talk about this in my show, I think last week. If not, it was the week before. But it is actually not as big of a deal as most people are making it out to be, because obviously once what truly came out and what was said, and then what it turned into with news articles, and then what that's turned into with how people, look at it and they form their own opinions. And it's, kind of like that game that we play in grade school called telephone, where one person says something and then it turns into something else and turns into something else. And, by the time that it gets to you, you've heard a completely different story. So it's not easier qualifying if you've got a lower credit score. That is absolutely not fact. Everybody still has to be able to qualify for the mortgage that they are trying to obtain. And what that was actually about is they were talking about making adjusters to pricing. So basically, there's adjustments to every type of loan. As you guys hear me talk about, your interest rate depends on your credit score, your down payment, your property type, your debt ratio, right? Those are all adjusters. Those are all changing the risk of the loan. So one of the things that they wanted to change was giving higher credit score borrowers with bigger down payments an additional adjustment to the interest rate, which would have brought the interest rate up by about 0.125% from where the adjusters had been previously. By doing that, then they also wanted to try to add an adjuster for somebody that's got a lower down payment with a lower credit score to try to help them to be able to obtain homeownership, which made a very, very, very minimal impact on everybody in all reality. This is not something that just started. It's actually been it was announced at the beginning of the year. It's been in our pricing models since February, and it only blew up and got crazy at the point that there was the news article that was run. I believe it was the New York Times that was the first news to actually report on it. But it's already been there. People have been buying homes. It actually, when we go back and we look at from before and to now, there's a lot of pockets that actually improved for people that have high credit scores with big down payments, especially investment property loans. Those interest rates improved significantly from where they were previously based on the new adjusters that were rolled out by Fannie Mae and Freddie Mac. So we saw a really good actual impact there. We saw a slightly worse interest rate or change, a little bit more in adjustments for somebody that has a credit score in the 680 to 699 range. But it changed so slightly, and it's already been happening for so many months that nobody even realized until there was just a news article that needed something to report on. So nothing to be concerned about, nothing that's going to help you to qualify for more or easier. You still have to qualify. You still have to come up with a down payment. depending on the type of loan that you're trying to get. But it was a great question, Dad. I'm happy that you asked it. I hope that answered it and it gives you the information that you need. But I actually I went into it in detail. I don't think that it was last week's show. I'm pretty sure it wasn't, because last week we talked with Mary about her rental properties, but it was the week before. So if you look at my YouTube channel, go back to my live from 2 weeks ago, and I actually talk about that. I read an article about it. I explain it. Our secondary department actually put out a memo through email that I read out loud to everybody on air, and it was really good for you guys to hear it and to understand it. So 2 weeks ago, if you guys want to check it out, it's there. Anyway, so hard money. Let's jump into hard money before we run out of time on today's show, which means that I actually got to get through all 4 different types of alternative loan programs today, which I'm super excited. I usually don't get through everything that I want to in one show. So super cool. I'm excited about this. So hard money. Okay. Why would you use hard money? Where does hard money come to play that it makes sense to use hard money? So hard money would be great if you're looking at a fixer-upper. If you're looking at something that is not, you can't get financing on. It needs, the roof is half fallen apart. You're buying a property that the builder started that he didn't finish. So you're buying, this, and you're seeing a lot of this right now. There's brand new homes, and they're saying, if you want to buy this, you can, and you can finish the construction. You can buy it at a lower price. So something like that. If there are health and safety issues where it's just not financeable, there's broken windows, the kitchen's been pulled apart, there's no toilets in the bathrooms, all the health and safety things that need to be in a home in order for you to obtain financing, a hard money loan is going to help you get the money that you need to buy the property so that you can go in, you can fix the property, and then you can turn around and you can refinance it for better lending, better financing options, or you could turn around and you could do a flip and you could sell it. So those are, that would be one particular reason why a hard money loan might come to play. It might be something worth your while. Hard money is also great for that investor that is a flipper. They're going to buy the property. Like I said, they're going to go in, they're going to do the repairs, they're going to turn around, they're going to put it on the market, they're going to sell it. So a hard money loan, as I mentioned before break, is going to carry a much higher interest rate, probably in the 11 to 12% range as of today. And that's not something that you want to pay on a long-term basis. So it truly is short-term financing. Hard money loans, they typically will write for 12 months, and then they do want you to pay it off. So it is a short-term loan. It is giving you the financing that you need to be able to buy the property. Now, hard money does usually want at least 20% down. It is usually closer to 30. They usually want 30% down. There are some hard money lenders that will do 25% down, but you do need to have a pretty big down payment to do a hard money loan. And they are going to look at the property. They want to make sure that the price that you are paying for the property, that they know that they're going to be able to get their money back from you, because it is a short-term loan. It is short-term, high-interest financing. So again, it is something that is going to get you what you need. Maybe like I said, maybe you want to buy this property and you've got to do some work to it before it can become financeable. This would be a way to get it. There's a lot of properties that are out there that are like that. You can grab them at a steal if you are somebody that is really good with doing the repairs, or you've got a great contractor in your back pocket that you can call to do those repairs. And, whether you're buying it for yourself or you're buying it as a flip, it is a really good way to get the job done. So that is where hard money would really come in handy. Hard money is also good if you are looking to take cash out of an investment property, and you want to go and you want to buy another property, and maybe, you just don't have the time to get all of the financing put in place, like normal financing put in place. You need to go really, really fast. Hard money loans can get done in about 7 days. I mean, they are very, very fast. So it would help you to very quickly be able to move and get into the property, not lose the property, grab that deal, and then to be able to go back later and get your actual real financing then put into place. So there is a place and a time for hard money, and it is there and it is available. And we do have resources that we can refer you to for those loans. So if you feel like any of these programs that we've talked about in the episode today are for you, or you have questions or you want to know more, again, please head over to our website, go to Mortgage Mom Radio. Don't forget the radio, mortgagemomradio.com. You can click the contact us button. You can click the appointment button. You can get yourself a time. You can send me an email. You can call our office. So our office number is 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. We will talk about you, your specifics. What are you trying to buy? What are you trying to refinance? What is your goal? How much do you have down? What is your credit score? Is it your primary residence? Is it a vacation property? Is it an investment property? We will figure out, are you self-employed? We will figure out what the very best loan program is that is available for you. And then we will talk to you about it, show you the numbers, show you the options. And ultimately, it comes down to you. Does it make sense for you? But we are here to walk you through those steps and to show you what it might look like. And again, these are options for people that didn't think that they had options. So it is very exciting. We do love these programs. They aren't for everybody. If you're a W-2 employee, you've got a down payment, you can prove your income, you want a low down payment, a 3%, 5% down, whatever that situation might be, you are a normal standard financing person. And we love those programs and we love those options as well. But today's show is all around alternative financing. So that's what we're talking about. Again, I am so happy that you guys did watch the show. The same phone number that you call us at is the same number to text the word mom. That is it. Just mom. No parentheses, no quotes, no opt-in, just MOM. That is it. Text the word mom. You will then get a link once a week when I go live if you would like to be able to join in and do the show with me, be able to ask your questions, be able to watch me do this. We take the sound, we send it to radio. Exactly what you see on this show is what goes to radio. I've got my timer going. I know right now I'm at 54 minutes. I know I've got 57 before I've got to shut it down to get it to the radio station. But you get to see it a little bit of it in advance. You're not listening by air. You get to be interactive, ask your questions and communicate. So Heather actually jumped in and says, you need a super fast close like buying for cash. Yes, that was I was talking about the hard money loan. That is absolutely accurate. They roll so fast. It's not even funny. So it will definitely help you to possibly get into a property. Maybe there's 10 offers on a property and you want to make yours more attractive. You can say, look, I'll close it in 7 days. And then once you've bought it, you can always come back, do your loan application, and we can get you into your permanent financing and you can pay off that hard money. So lots of different reasons to use any of these loan programs. Opt yourself in, be part of my show on during the week. Call us, go to the website, send us a message, schedule an appointment. We want to hear from you. We want to talk to you and we want to help you get what you guys need. So once again, it's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. I will not be back next Wednesday. Next Wednesday, I am going to take it off because I will not be running a show on radio for the holiday for Memorial Weekend. My son Mikey is graduating from high school that Friday, the 26th. So we are going to be, I'm going to be a very busy little mortgage mom next week. So no show next week, but I will be back the week after that. If you want to make sure that you can join us, make sure you opt yourself in, text mom to my phone number, and I'll see y'all then. In the meantime, call us and let's answer your questions. So one more time, it's 844-935-3634. Talk to you guys all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.